Well, I mean, it's all about the things you're talking about. It's inflation, it's interest rates, and it's the unknown, right? I mean, we know that there's inflation out there. We've been talking about this for quarters on end. The problem today was that it's broadening out. Rents and services inflation is almost up 4% year over year. And of course, we know that services inflation is 60% of CPI and rent inflation is 30% of CPI. So inflation is here to stay, absolutely. And then if you want to add on wages on top of that, that's above pre-COVID levels. So that also is pretty sticky. So we know that we have inflation. We know the Fed has to go. The confusing part is you had Bullard, who's always hawkish, quite frankly. So I'm not surprised that he said what he said. And you have Powell much more measured and more data dependent. So I'm not sure where it's all going to shake out. But it's the unknown of how much and when. And they're still buying, as you mentioned before, a couple of times so far in this hour. They're still buying bonds, the same amount as that they're buying from April 2020. So they're still, so it's so confusing. I mean, they could just stop buying bonds tomorrow, and that would send a signal, right? So, but who knows if they will. Bottom line is, I know we have inflation. I know it's kind of scary with the unknowns, but the economy can definitely handle 100 basis points, even if it was between now and July, because the economy is still strong. Looking at all kinds of data points that we talk about all the time, PMIs, ISMs, new orders. I mean, new orders are off the charts, and that's a leading indicator for future earnings and CapEx cycles. The consumer is fine. Wages are up. Jobs are plentiful. So there's a lot to look forward to, and I don't think we should be afraid of 100 basis points. And then after the 100 basis points, then we become data dependent. Then we see if we've made any progress with regards to inflation. I tend to think not, but let's just wait.
You know, Steph, obviously during this earnings season, it's been a parade of CEOs kind of, boasting to some degree about their ability to put forward price increases and have them stick. I wonder how that plays into this on the macro side of things, not the political side, but just in terms of that psychology that's going to now be working through in terms of management, as opposed to CEOs looking to, scrimp and preserve margins through cost cuts and things like that.
Yeah, no, I mean, it's a really good question, and that has definitely been a common theme, Mike, as you know, throughout earnings, that companies are raising prices. The number this week that was just astounding to me was Cisco, the food services company, seeing product cost inflation 14.7%. That's a price increase. That was astounding to me. But we're hearing it across the board. Look what Pepsi and Coke said today, pricing in the 7% range kind of thing. So you do have to worry about down the road, what does it do to demand? So clearly that's another data point that we're going to have to watch for. But in the meantime, the other themes within earnings, as you know, free cash flow is off the charts. CapEx is starting to increase. They're still actually raising dividends and buying back stocks, so they're still being shareholder friendly at a time when many companies had to, over the last 2 years, restructure just to survive. So a lot of companies, their business models are very, very lean. And that's why I say you pay attention to the economic data that's helping them on the revenue side. But we obviously have to watch on the inflation on the inflation point, and that's why you're seeing a sell-off. My strategy, look, I'm long only, so I'm going down just not as much as the market. Your strategy is to try to find sectors, if you're long only, just to be in kind of the relative winners, and that's really reflation, pricing power stories, and reopen.